Hello and welcome to another episode of our From the Helm series here at Bell Financial Group. I'm Grady Wulff, Senior Market Analyst with Bell Financial Group. SenSen Networks is a company specialising in AI and vision analytics at the moment with current customers in government and enterprise space. Today, I'm so thrilled to be joined by the company's CEO, Subhash Challa. Dr. Subhash Challa, thank you so much for joining us today. For our investors who may not be aware of the company, can you tell us a little bit about the story and how it came to be?
SenSen Networks was a spin-off from University of Technology, Sydney. I was a professor of computer systems. Me and my PhD students came up from Breakthrough Technologies, and they became the foundation of the company. It was spun off from UTS many years ago. I incubated it, grew it. Some of the students became CTOs and senior engineers within the company. So it's a story of research incubated in a university, now becoming a global leader in smart cities.
So what does it do for the average investor? How does the technology work?
So technology solves a very important problem for cities. Cities are managed by city councils, as you know. So as the population increases, the pressure on resources and different things cities manage increases. So one of the forgotten assets of city which is under pressure today, and it is growing pressure, is the footpath. Okay, footpath doesn't grow, buildings are growing.
Yeah.
So there's a lot of competition to use the space. So the cities, respond to that challenge by rationing the space. They try to say, if you are a bus, you can use this. If you're a taxi, you can use this.
Yeah.
You can drop off and pick up here. You have a loading zone, or you have a no stopping, or things like that. So they ration it both in space and time, and they put up signs up there and saying what you can and cannot do.
Yeah.
Of course, no regulation works if there's no enforcement. So predominantly until SenSen became to help them, they have been doing it all manually.
With all the parking inspectors and things like that, yeah.
Belt-mounted printers with a bit of a handheld, they walk around. They get abused. They are, facing, rain and sun and hail and whatever else. So it's not an easy job, and I don't believe anybody is born to become a parking ranger.
No.
So it's a necessary, job to do. It's not an easy job to do.
Yeah.
And also, if you look at the city's overall scope, they may have 10 kilometers, 100 kilometers, depending on the size of the city, of the curb. And no matter how many officers you put, you just can't have enough people to do the job. So SenSen basically developed a technology to fully automate that process of monitoring the curb, enforcing the curb. Officers can sit in their vehicles and have a drive around, or they can sit in the back office, and evidence of whether people are complying, not complying, shows up in their back office. They just log into a web portal and they see all the evidence of things. So effectively, we made it very efficient, scalable, and actually it means safer roads, less congested. You go to a place, you'll find parking quickly. All that can happen if it is enforced properly. So we are attacking that problem, and that problem is there throughout the world. It's not like Australia or Sydney. Every suburb you go to, you will have a section of road which is getting congested. So it's a worldwide problem. So we are in Australia and New Zealand, Singapore, Canada and US, and the whole world needs this solution.
You can address the world's problems. Now, your financial results for FY25 showed revenues of $15.4 million. That represented a 25% growth year on year, which is incredible in such a tough economic environment that we saw last year. What were the key drivers of revenue growth, and how are you looking heading into the new financial year?
So, as we just touched upon it, it's a global problem. So we are growing in Australia organically. Obviously, we are born here and we solve the local problems first. But last year was a significant year for our Canadian customers. So we won City of Montreal, and City of Calgary went for retender and gave us a contract for another 9 years. So it's those two created a bit of a push to our revenue top line. But very important thing in our business is that every city that we're already in, whether it's Australia or Singapore or Canada or US, they all are increasing the length of curb they enforce. So there is an underlying growth that comes from existing cities doing more. Usually 15-20% of growth just comes organically.
Wow.
And then we win a few customers, then that goes even more.
Yeah.
As the adoption is increasing, we expect more and more of the new cities joining and existing cities doing more and more. So that's the drivers of growth. It was a great year last year, but it's not magical year like that. If you look at the trend, it's going from 5 million, 9 million, 12 million, 15 million. So we've just been pushing the boundary, and now we have got the revenue and profits above the cost line so that we are profitable, and will continue to be so, I guess.
Now, you do operate in a large, high-growth AI area. AI is the word of the moment, so the fact that you use that is really kind of what investors want to hear in this current market environment. How do you articulate the size of the global addressable market today, and how quickly do you believe you can capture quite a meaningful share of market?
Yeah, there are a couple of ways to cut it. We are currently in 60 plus cities globally, 25 or in Australia. Between US and Canada, we are about 25. And there are a few in Singapore and a few other. If you add up, then it will go to 60 plus. The total number of cities in the world is 10,000 plus. We're just in 60. But we are in some of the most iconic smart cities you can call up. Vancouver, considered the smartest city in the world. Brisbane is one of the smartest cities in the world. Singapore is one of the smartest cities in the world.
Yeah.
So all the big name clients who are thinking they are the smart, they want the best technology, we already won them.
Yeah.
Now that is spreading to other cities. So people copy other cities to make themselves better. So we are in that process right now. So that is one way to look at it. There are just over 100 times growth possible within this city on a per city basis. And within each city, our revenue is growing. So you can also see the growth that comes that way. The other way to look at the scale of the problem is to say there is just in Brisbane alone, which is one of our big clients for SenSen, they have like 800 kilometers of curb.
Wow.
We're probably only doing 50K right now.
So you can grow globally and also within the cities.
So if you take the amount of curb that need to be managed in the world, that will run to millions of kilometers.
Yeah.
And you can't just put enough people out there.
No.
So cameras, sensors, fusion of data from these cameras and sensors with enterprise data is a critical technology. That's what SenSen developed. And we believe, it's a massive, massive market.
And your technology, is that patented or is it
Yes,
protected?
There are quite a few aspects of the technology are patented. These are global patents. And we continue to discover new ideas and we do it. In this market, it's more important to have adoption cycle increase. Technology is changing very fast. So even your idea that's patented might become outdated very quickly.
Yeah.
So we do invest actively into R&D. We try to make sure our leadership is managed and maintained. That's the way we kind of expect to be a leader.
And what are your target annual growth rates? So revenue, annual recurring revenue, customer count, and when do you expect to hit the higher growth scale that you're targeting?
So we are currently incentivized internally as 25% year-on-year growth for most of the executives. But as you can see that the more people, more cities adopt quicker, the faster the growth is going to be. If your internal organic growth rate is between 15 and 20% from existing clients, it doesn't take a lot to get to 30, 40%.
Yeah.
However, it still needs strategies to be played. We need to have a way to, government customers are risk averse, so they think twice before they buy anything. So we are doing lots of strategies or developing a lot of strategies to minimize or mitigate the perceived risk of the customers. We're working with channel partners who provide related solutions to accelerate our sales. So there's 3 or 4 strategies that we are exploring at the moment. And we'll obviously inform the market on what's working, what's not, and results will talk for themselves.
Absolutely. Now, your core platform is SenDISA, data fusion AI platform that you obviously operate around the world right now. How do you differentiate from competitors that operate on the market, and what barriers to entry do you see?
So if you look at it, the customer base we're targeting is city council, government, law enforcement, that kind of base. They are very risk averse in a sense that even if a really smart technology comes up, that is better than, us, which can happen once in a while. They don't like to buy from newborn startup.
Yeah.
You got to prove
yourself. Absolutely.
Yeah. And if you go to grown-ups or scale-up companies that are in this space, they are old school, delivering manpower to the cities, and they are more in that mode. And even a tender would come out to say, I want to automate the city. They say, I'll put 50 officers, and per officer we pay you this, right? That's how the tenders is.
Yeah.
So those guys are saying, oh, how do I break my business model? I can't put this technology into it. So grown-ups are struggling with not inventing, not disrupting their own business model. Startups simply can't get in.
Yeah.
We are a unique company. We were a startup some time ago. We had a long history of 15 plus years building technology and building the market. So we are one of those few startups. We survived the scrutiny of getting government customers and still alive. And, we have amazing technology. So I think we are one of it's very hard to see these grown-ups coming in. They are all becoming our partners, so that whoever is deciding to disrupt, they rather become our partners than their own technology.
Yeah.
So I think we have a good time within which we can become dominant. And when competition comes, we'll deal with it. World is a very big place also, like the 10,000 cities as we know. So yeah, there may be few players, but at this stage we are the leader. And we will continue to be the leader for some time.
Now, how much of your business is recurring revenue versus one-off revenue hits, and what percentage of are you targeting right now to get in percentage for annual recurring revenue?
In the last financial year, annual report, if you look at it, our total revenue is 15.4 or something, out of which we disclosed that we have a point-in-time revenue, which is about 5 point some million, and about 9.6 million is overtime revenue.
Okay.
Overtime revenue is close proxy to ARR.
Yeah.
We are doing more analysis right now to release trends of our ARR and the growth rates. Once we publish that, we'll kind of know. But at this point in time, just based on the last year's numbers, a third of revenue is the upfront project and that money, and 2/3 is ARR. I guess over time we'll keep increasing the component of ARR beyond that, but that's a proxy for now.
Yeah. So profitability is what a lot of investors want to hear about, and you've recently turned profitable in FY25. Congratulations. And now you're operating cash flow positive for 6 consecutive quarters. So that's a big tick from the financial perspective. How did you achieve this, and what is your capital allocation policy? Is dividends on the horizon at all?
I mean, as a tech company, you would always want to reinvest to capture a bigger part of the market. So I think it's too early to talk dividends, but it's important that we reinvest our money into more sales, more city captures, some technology investments to make sure we are the leader. So that's what we will look to achieve. In terms of how we got here, we always needed to be about a certain minimum number of cities to fund all the R&D and the teams and other things. I think we are well above that right now. That number was about 10 million. And as we crossed 10 million, we were already getting there. But we just had to come from behind. So if you look at the curve, it is like last 3 years, we have been cutting the costs and increasing revenue. So we're now well over on the other side. And for incremental growth in revenue, we don't expect to increase OPEX to catch up.
Yeah.
Because our revenue model involves software license based on the number of infringement generated by the system, and the software license for the back office. So that keeps growing without extra effort. So the whole idea is to have that grow, and we don't need to increase the OPEX. So we believe modest increases are naturally expected to grow the a sales team and that kind of stuff, but not anything commensurate to the revenue growth we expect.
Yeah. But now, what levers do you expect to pull in order to appreciate margins and expand on margins so profitability continues to grow?
If you look at our gross margin, we're already around 80%.
Wow.
We grew from 60% to 80, 79 as of last annual report. And I expect it to keep moving towards 90%. Right? It's like a software SaaS model. So gross margin target is pretty close to what we expect ourselves to be, and we'll continue to keep that up. It's more about top line growth now, more cities, more curve to be managed, that kind of stuff.
And do you have marketing teams around the world that are selling the product, or how are you expanding internationally?
So yes, we have a sales and marketing team in Australia, Singapore, and North America. And they're all empowered to grow the market there. But some of the interesting things that we found was city councils benefit a lot from our solution. They are able to do more with the same number of people. They are able to deliver better services, safe and congestion-free roads. So because of the success, and some revenue also grows for the cities, what they do is they try to tell the story to other cities. To say, hey, this is how you can improve your operation. Then cities don't compete with each other. Unlike a product might help other competing companies, cities just like to learn from each other. So we have a very good model of user forums where we do very frequently. So we have customers in Queensland, and there will be a user forum in Queensland where one city would be telling all other cities how they're doing it. Same thing in New South Wales, same thing in Canada, and we replicated that model. And it's a very effective way, highly productive way that cities are learning from each other to grow. That's one way we do it. We, of course, are part of many industry forums, conferences, and so on. And the third one is we're working with partners or channel partners who are they may be number 2 or number 3 in the leadership ladder. They want to become number 1. We are the way to become number 1. So we have identified some partners who are working with us. And we're empowering them to sell. So few partners, like the partners we're working with in North America alone, together they are already in 1,000 cities.
Wow.
So we just working with them to open up those cities so we can go and introduce our product. So those are different strategies we're using on how we market, how we sell, how we scale the products and revenue.
So that's fantastic. And finally, what news flow can investors expect over the next 12 months from SenSen Networks?
I think they should continue to expect our growth in North America. That's a very important part of business. We'll continue to grow in Australia. So both the existing customers increasing their curve length and revenue because of that, and also the new customers joining the fold, and partners delivering a bit more than what they were doing before.
Absolutely.
So these are the 3 things that will become catalysts of what kind of news flow we can provide.
Dr. Subhash Challa, thank you so much for joining us today to tell us all about SenSen Networks. We're so excited to see what it holds over the next 12 months, and I really hope you enjoyed that episode of From the Helm as much as we did filming it. If you did, be sure to subscribe to our YouTube channels to stay up to date with all market commentary, insights, analysis, and of course, exclusive interviews like this one.